He is the first CEO to win this award for a second time in this awards package, and he is always gracious in accepting the award. We are delighted to recognize him as our CEO of the Year award. Please join me in congratulating him on this accolade and on his many important and impressive achievements.
First of all, let me congratulate Chris in celebrating the 10th year of EMEA Finance Awards. A great character in recognizing, sustaining institutions for performing ratios. It's a privilege for me to be integral to that. Before the award function, Chris has asked me a few questions, and he said he wants me to address the keynote. I'll take just 10 minutes, that's what the time he allotted. 5 questions he asked. The questions and the answers which I characterized in my own terms. If I share this, we have done the keynote. The first question he asked me was, how do you look at the global economics and where do you see the global sustainability? The second question was, what are the changing business trends and how the financial services is getting redefined? Third, of course, he did mention in his preface, how do you see the digital convergence and what sort of transformation take place in terms of revenue generation between fintech companies and conventional financial institutions. The fourth one was confined to what sort of realignment required in terms of your business modeling. The last one was more towards commitment to stakeholders, including social responsibility. These are 5 important questions. I think we as fellow bankers, we need to understand, perhaps we can synergize our thoughts to still take a shared vision to make sure that our institutions are sustaining its glory. Let's start with the first one. The changing global economics is reorganization in terms of the global trade or investments. Banking is only financial intermediary in real order. Globalization has become economic nationalization. That's what the Trump administration has been advocating. It rescinded the TPP. It rescinded the NAFTA. Today, after 8 years of financial crisis, when we recognized liquidity was a major issue, liquidity crisis moved into a funding crisis, funding moved into a solvency and sovereign issue. But unfortunately, if you look at the global economics, the gross debt to GDP has increased. While we fixed the liquidity issue by quantitative easing, trillions of dollars have been put, hot money was transcending borders, it was recovering the housing market, inflating the stock and capital market. But the gross debt to GDP, including China, is excessive. Right from America to Japan to China, name it. The beginning of the crisis was a clear lesson. It was a clear individuals or institutions, countries or continents who have lived beyond their means have to pay a price. That's precisely happened in Europe or US. Today, we are repeating the same. Global trade is said to be recovering. Global economics is said to be, according to IMF projection in January, it's said to be 3.9%. Advanced economies are still grossly under pressure. Emerging economies, incrementally adding values, over 60-65% of the incremental productivity, are slowing down. We have seen the reflection in terms of emerging markets. The financial markets have become gambling grounds, absolute gambling grounds. While we inflated by artificial means, now it has become a true global highly volatile financial markets. And speculation beyond definition is getting back in track. Global sustainability, if you look at it, while the growth momentum has picked up, still we are grossly underperforming prior to financial crisis. Global growth is still less than 2009. Global trade till 2016, which was less than half of the GDP, while it has to be double of the GDP as normal norm, has shown some signs of recovery, but with the conflicting or divergence policies between developed countries, you have a bigger stagnation at stake. Global banking itself is running through reorganizations. Institutions which have lived beyond their means, excess leveraging has to pay a price. That's what Lehman Brothers is all about. That's what Bastion is all about. And institutions were gambling in real sense, and they were excess leveraging. Today, you have to play with your own funds. That's why Basel III was recognized as a structured solution. Now you have IFRS 9, new accounting framework. So deregulation has become re-regulation, and again, it has become deregulation to further ignite the underlying economies. And that's the global scene. Within the Middle East, North Africa, Afghanistan, and Pakistan, we have seen the reflection in different order. Geopolitical crisis in the Gulf itself is challenging the unity of the Gulf Cooperation Council. That's the global economy. That's the global trade for you. When it comes to financial markets, the capital market was overheating, and we have seen reflection, whether it is stocks or currencies or commodities or bonds. It's all interconnected, interdependent on the basis of quantitative easing. America is said to be recovering. They're inflating in the market, and the interest rate is on recourse. While Europe has done their homework, the fiscal system has proven to be solid, and fiscal consolidation is happening. Inflation is still an issue. But the financial markets is anyone's guess. On the second question, how do you see the digital convergence? What sort of digital ecosystems is going to change the business model? And we have reflection in real order. Today, whether it's artificial intelligence or robotics or fintechs, are throwing enormous amount of reorganization in terms of revenue generation. We have also seen the telecom companies are an integral part of the banking system. It's difficult to distinguish between a technology company and a bank. With the change in phase of financial service, with the change in phase of technology, customers are no more location-centric, they are information-centric. They are product-centric no more, and they are now consumer-centric. It's one wall, borderless wall, and they are integrating anytime, anywhere. It is e-commerce, apart from internet banking. Mobility has become a major driver to define your destiny.